All right, today let's dive into ETFs. One we are going to be looking at today specifically is the HBAR ETF by Canary Capital. And if you've been watching digital asset space for the last few years, you've noticed a little bit of a pattern here. And I think a lot of people have been dominated around two things. One could be speculation. The other is, of course, price volatility. I think these are the things that right now we are facing around the evolution of this space. And I think the phase of where this technology is going. So if you look past the noise, you're going to see a few things past the meme coin cycles. There's a little bit of a quiet shift happening right now in the background. And I think it's maybe that we finally have traditional capital, as they say, kind of the adults have arrived to the market. So if you're an investor out there, it's always, how do I get exposure to a lot of this infrastructure without getting into a confusing situation? Well, that is what we're going to be talking about today. Let's just jump right into it. So this is the first and only exchange-traded product that's being offered around exposure to Hedera. And this, of course, is brought to you by Canary Capital. Why does this specific ETF matter right now? There's a lot of them in the space out there. And the idea is that the future valuation around digital assets are not going to accrue around networks built for anonymity or speculation, but networks that are built for governance and compliance. And I think that's what makes HBAR quite a unique chain. Canary Capital, of course, which is the one behind this, isn't just another asset manager either. They're not just throwing any product at the wall. We've had them on several times on the show. They're going after very specific asset investments that are focused at bridging the gap between blockchain innovation and the TradFi capital markets. So that's where the entire philosophy is really focused. And I think you have to look at this when you consider financial activity at scale. Canary, of course, has been one of the leaders out there. So when I look at what they have been able to do, they kind of stepped back, looked at the entire landscape, and then they jumped in on Hedera. Now, a lot of blockchains that started as kind of the science experiments, we've talked a lot about them on the show, in kind of just a general, labs type environment. Hedera was architected a little bit differently. It was supporting real world financial infrastructure, and it's a network that was really designed to meet the operational regulatory requirements for a lot of these enterprises that are out there. That's why you see the governance board and all the enterprise companies that are involved with them. And we're also going to talk about why major players like BlackRock, Aberdeen, and even the state of Wyoming are looking at this tech. All right, so when you look at this, a lot, as I said, for years, crypto conversation's pretty much been dominated by retail speculation and meme coins, right? But the real money is starting to look at how do we go into some of these stable, more compliant projects at scale. And that's where HBR and its first launch is really playing into maybe an overall program. The concept was pretty straightforward. This isn't just another crypto project. It's really a bet on infrastructure. And I think that's why they have really put together a situation where they are now moving toward networks that are built for regulated real world finance. And Hedera and HBAR, the ETF, is one of those. Let's get into Canary though, because Canary Capital also, not just another asset manager, they are a bridge between blockchain innovation and traditional capital markets. I've had Stephen on many times. He and I have gone down this path of why they are so different. And when you look at their philosophy, they don't just go out there and chase hype. They're really looking at networks that are capable of supporting regulated financial activity at scale. And if you think about what they really focus on here, Canary really goes after transparency and investor protection. All of this has to be set up with regulatory alignment as well. So when you consider all of that, along with why they selected Hedera, it really aligns with the institutional expectations. This is the thing about Wall Street right now that we're dealing with. Risk management typically are one of the key things that they're looking at. And if you think about what they're doing, it's pretty native to the network, and it's not necessarily an afterthought when it comes to Hedera. When you look at Hedera, it's built on Hashgraph consensus, which avoids a lot of the bottlenecks of what older blockchains are dealing with. Very predictable fees. That's one of the key things. Speed is another major factor, and of course throughput, part of what makes them more of a global scale compliant blockchain. And you look at that, and the highlight that Hedera has architected from pretty much day one, you have to kind of consider what they've done around their native KYC and AML enforcement. This, of course, is the Hedera Token Service, HTS. This allows all institutions to issue tokens with regulatory controls built directly into the asset. So when you look at trust and where governance and how they've built their council comes into play, a lot of crypto has been really built around kind of these anonymous ecosystems that have these mining pools that are somewhat concentrated. The governing council is quite a bit different. This is a line list of some of the best companies out there. You've probably recognized all of them that we've talked about here on the show: Google, IBM, Dell, of course Nomura, even Standard Bank are involved in this. So this is where I think they separate from the pack in terms of authority. So when you look at adoption, a lot of this is moving beyond the pilot side, and many of these projects have been in pilots out there for a long time. Hedera is quite a bit different. Obviously, they've had some major partnerships with Swarm at the Hedera Foundation. This, of course, is getting into tokenized U.S. equities, whether you think about Apple, Tesla, et cetera. This is 24/7 real-time trading backed one-to-one. Those are some of the key things. This, of course, proves that Hedera can handle regulated securities and DeFi simultaneously. And also, don't forget that they were one of the major tokens behind and projects behind the state of Wyoming in the public sector that highlighted the opportunity of being able to utilize Hedera for the front. This was the FRNT stable token. Why is that significant? Wyoming is a major regulatory pioneer. They are setting the standard for what could come out in state-issued stablecoins down the road. So why now? Well, most of the market, I think, has started to move from pilots to production. That's where HBR offers a lot more exposure and transition into this phase. This is why you guys need to take a look at this. And when you look at HBR and what it offers, the ETF, familiar access via an ETF, this is a normal process I think a lot of investors have started to consider. And also it's the convergence of registered investment design by enterprise-grade infrastructure, meaning that HBR, designed in through Hedera, is kind of setting the tone for what this really is going to look like in the future. So HBR may be the vehicle to get you there. Make sure and check it out. You guys can visit Canary Capital. They've launched the first and only ETF, HBR. Make sure and visit their website to learn a little bit more. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.